In a whirlwind of conflicting statements and policy moves, U.S. President Donald Trump's administration has sent mixed signals regarding the status of tariffs on electronics and semiconductors, fueling confusion across global markets. Last Friday, U.S. officials reportedly announced temporary exemptions on certain electronics imports, offering relief to tech companies like Apple, whose shares had taken a significant hit since the tariffs on Chinese goods were raised in early March. However, over the weekend, Commerce Secretary Howard Lutnick clarified that the exemptions were only short-term, and electronics would soon be recategorized under new tariff structures. President Trump, meanwhile, publicly contradicted his own administration. On Truth Social, he insisted that no tariff exemptions have been announced and asserted that affected products are still subject to an existing 20% duty. He added that new tariffs on semiconductors and the broader electronics supply chain would be revealed within the week. China's export figures soared by 12.4% in March, far surpassing expectations, indicating that Chinese manufacturers were rushing shipments before the new tariffs took hold. In retaliation, China announced restrictions on the export of rare earth elements and magnets crucial to global tech and defense industries. Beijing has also pledged to bolster domestic consumption and shift production to support local industries impacted by the trade war. However, analysts remain skeptical that China's domestic market can absorb the economic shock of reduced U.S. trade. In the U.S., financial markets have experienced sharp swings. The initial relief rally following the announcement of potential exemptions was short-lived. Uncertainty returned after Trump's comments undermined the earlier policy signals. Apple stock remains volatile, while semiconductor firms are bracing for impact. Swedish Finance Minister Elisabeth Svantesson voiced her concerns during an interview, calling the U.S. economic policy under Trump sorrowful and warning of broader negative implications for European and Swedish growth. Investor and real estate magnate Sven-Olof Johansson criticized Trump's erratic leadership, suggesting that it has created historically high levels of uncertainty. "We're seeing a one-day rally, one-day crash scenario," he said, advising investors to focus on long-term strategies and diversify into quality stocks. The situation remains fluid. With the White House poised to release specific tariff details in the coming days and China digging in for a prolonged standoff, global markets are bracing for more volatility. Analysts warn that this is not a peace deal. It's merely a temporary ceasefire in what appears to be an escalating economic conflict with no clear resolution in sight. Observers are closely watching upcoming developments, particularly any shifts in U.S. policy or retaliatory actions from Beijing that could further disrupt global trade and supply chains. The deepening uncertainty caused by conflicting policy signals is a significant risk for multinational corporations and global supply chains. Markets thrive on clarity, and the lack of a coherent message from the U.S. administration increases volatility and investor caution. While some businesses may find short-term reprieve, the strategic implications of a prolonged trade war, including shifts in production, supply disruptions, and inflationary pressures, are becoming harder to ignore. Both governments appear entrenched in their positions, and until a sustainable dialogue emerges, economic diplomacy will remain strained and global markets on edge. For Nordic companies, particularly those in export-heavy industries such as machinery, electronics, and logistics, this uncertainty could pose both risks and opportunities. Firms like Ericsson, Nokia, Volvo, and Maersk may benefit from reduced U.S. reliance on Chinese supply chains, potentially gaining new contracts or customers. However, increased input costs and delays in sourcing components, especially those reliant on Asian manufacturing, could challenge operational efficiency. Nordic economies, with their deep global trade ties, may face increased exposure to demand shocks and price instability unless new trade routes and partnerships are established in response to the shifting global landscape.